All right, let me bring this thing over, and we're going to be talking about pullbacks versus reversals, and we're going to be going over, right? What's the difference between a pullback and a reversal? And also on top of that, guys, how do we know, right? How do we know when a stock is a pullback and when a stock is a reversal? Now, this is going to be our first lesson of 2020. It's also a lesson we've never done before, which I absolutely love doing lessons we haven't done before because, as you guys know, on tradecaster.com, you click video library at the top, you're going to have over 200 hours of lessons. I've been doing lessons for you guys for about 5 years now. So we almost have every single topic covered. So I love, again, finding new topics and new lessons that I can go into and give it, different explanations to help you guys out in your stock trading. And one of the big things people get caught up in is when a stock starts dropping. And when a stock starts dropping, does this mean that it's going to be a great opportunity for me to get in on this play, right? Be able to get on a bounce play. Stock will be able to move back on up. I'll be able to make some nice profit on it. Or when a stock starts dropping, does this mean I should stay away from it? Does this mean, again, the stock is actually reversing and starting to fall, right? So I want to help you guys out here, give you guys a few different tips and tricks to understand when is a stock pulling back where we can get in to be able to make money as the stock is at a lower price and the stock will move back up, or when a stock is reversing and when we should just clearly stay away. So the first things first, what we need to do is we need to understand the difference between a pullback and a reversal. So let's talk about a pullback first. What is a pullback in the stock market? Well, a pullback is a pause or moderate drop in a stock or commodity pricing chart from recent peaks that occurs within a continuing uptrend. A pullback is very similar to retracement of consolidation, and the terms are sometimes used interchangeably. The term pullback is usually applied to pricing drops that are relatively short in duration. For example, a few consecutive sessions before the uptrend continues. So that's all a pullback is. A pullback, guys, is when a stock's going to be able to move on up, right? Be a top gainer, be able to climb, have a nice trend line, and fall back on down, but we know it's going to be able to continue to move on up, right? So visually, a pullback would look something along this. This is the SPY. And the SPY, this is a very nice uptrend that we're continuing to move up over time. But there are a few times that we have a pullback and the stock moves on up. And we have a pullback, but then the stock moves on up. And we have a pullback and the stock moves on up. So if we know that this stock is only having a pullback, but not dumping, right? We know we can get in at these lower areas and we're going to be able to make profit. Right? So we know we can get in on these lower areas and down the road, the stock's going to be able to continue to move on up. Right? Now, this is a daily chart of the SPY. Right? It doesn't need to be on this. I could bring up all those trend line picks that I always bring up to you guys. And we can say SGY right here. Right? SGY spikes on up. We have some red candles, but then it continues to move on up. Right? If we want to look at other trend line picks, we could see CLRB. Stock spikes on up, dumps on down a little bit, but then continues to move on up. Dumps on down a little bit, continues to move on up. Now, when again it cracks the trend line, that would mean a stock is reversing, and then we can talk about that in a little bit. But whenever we have the trend line, just because a stock falls doesn't mean the stock is just going to dump and is going to be gone for good, right? Just like, again, like PULM, the stock, dumped on down, but then started moving back on up. Right now, this isn't on any sort of trend. This is a little bit different as we're talking about day trading penny stocks. But what I first want to start off with is having you guys understand what is, a pullback. And I'm pretty sure, again, you guys are getting that sense. It's a very simple concept, knowing that the stock will continue to move up over time, but the stock is just coming back down for a little bit. And how I always think about it is I always think about it as it's a natural agreement. It's an agreement between buyers and sellers, right? Because a stock does not go straight up. When you talk or think about, a stock in your head, what's probably do you think about? You think about this, right? A stock moving on up. Like that's probably the image you get in your head. Do you ever think about this when you think of a stock moving on up? No, that's like not the image, you get in your head. You think of it moving up a little bit, coming back down a little bit more, moving up, coming back down, moving up, coming back down, moving up, coming back on down. But you can still see that this is building higher lows. And as long as this is building higher lows, it's going to be able to continue to move. But if you buy in, right, on all these little pullback areas, right here, right, and right here, and right here, you're going to be able to make some nice profit. And all a pullback is when we have all these buyers and saying, hey, you know what? People are going to want to short this. People are going to take some profit. So again, basically the stock stops, pulls back, and then it continues to move. Basically sellers take over. Buyers said, okay, you had your fun. The stock is nice and low. More buyers move on in, right? So let's talk a little bit more about pullbacks. Well, pullbacks. What we have right here is a pullback is a short pause or brief reversal in the price action in the stock or commodity. The duration of a pullback is usually only a few consecutive sessions. A longer pause before the uptrend resumes is generally referred as consolidation, and pullbacks can provide an entry point for traders looking to enter a position while it remains bullish. Right? All great things. Now let's talk about something a little bit more scary, right? And what would be more scary? A reversal, right? So a reversal is a change in the price direction of an asset. A reversal can occur to the upside or downside. Following an uptrend, a reversal would be to the downside. Following a downtrend, a reversal would be to the upside. Reversals are based on overall price direction and are not typically based on one or two periods/bars on a chart. Certain indicators, such as moving average or trend lines, may help in isolating trends as well as spotting reversals. Okay? So, in the most simple, blunt Dekmar trades definition, a reversal is when a stock starts going from one way to another. A reversal, if a stock is moving up, well, now again, a reversal happens and the stock is going to start moving down. A reversal is when basically all buyers move out of a play and all sellers move into it. All right? So this would be a reversal where you could see that the stock is moving up, 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 up. And then what happens? It drops and we start falling apart, right? Now, where do reversals usually happen? Well, reversals are going to happen at the crack of uptrends, at the crack of support lines, and that's where a lot of sellers move in. That's where stop losses are hit, and that's where shorters are also going to take over. And we can go back to the same exact, examples as I was showing you guys before, where we were looking at these trend line picks, right? And whenever we bring up a trend line, right, we could see, look at this, pullback, bounce, pullback, bounce, pullback, bounce. But the crack of the trend line is a reversal where this comes back on down, right? Just like, and again, it doesn't have to be trend lines. I don't want this to be a trend line lesson, right? Right here, we saw SES. SES spiked on up, but then started dumping back underneath $10. That's a very strong reversal area because that's cracking a strong support line, right? So pullbacks are areas where you get in at the bounce and you can expect it going to be moving back on up. A reversal is more along the lines of where the stock cracks or the stock falls and there really isn't going to be much of a pullback and the stock's going to be more, what? Just continuing to fall in that direction, right? So, where do we have today? What do we have to do? A couple of RCON, spike on up, then started reversing, starting to come back on down. Let's dive a little bit more into our lesson and we can talk about all these. So now we know what a pullback is. Now we know what a reversal is. Some key takeaways from a reversal. A reversal shows that the price direction of an asset has changed from going up to going down or from going down to going up. Traders try to get out of positions that are aligned with trend prior to reversals, or they will get out once they see the reversal underway. Reversals typically refer to large price changes where the trend changes are smaller. Small counter moves against trends are called pullbacks or consolidation. When it starts to occur, a reversal isn't distinguishable by a pullback. A reversal keeps going and forms a new trend, while a pullback ends and moves back up in the opposite direction. So that kind of last line helps us understand a little bit right away. A reversal isn't distinguished from a pullback. A reversal is when it keeps going through the pullback and ends and moves back in the opposite direction. All right. So now what we have right here, guys, is what you guys have been waiting for, which is what? Ways to tell, right? Because how many people, right? How many people have gotten into a play before, right? And let's say there's a big time spike on a stock. Stock starts spiking on up, spiking on up, spiking on up, right? You don't chase it, which is good. And the stock starts coming back on down. And you say to yourself, hey, you know what? This stock right here, this is going to be a good dip buy, right? I know we have some support right here. I'm going to look to buy the stock right here, and then hopefully the stock can, bounce off this and start moving on up. But what happens, right? What happens is that the stock actually does what? Just keeps falling, 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 and falls apart. So how can we distinguish now, when a stock is going to have a reversal and when the stock is going to be having, a pullback and we're going to be able to make money? Well, there's a couple different things that you guys are going to want to study, okay? And what those are, ways to tell the difference. Number one, how low it falls from the top. Number two, how high it has spiked already. Number three, what are the market conditions over the past week? Number four, level 2 reading. And number five, did we hit a main target already? Okay? So let's talk about these because these are all ways to know if a stock is going to dump on off or if a stock is going to actually be able to have a bounce. So the first one we have right here is how low it falls from the top. You must stay within the top 40% of that play. All right. So we're going to talk about this right now. If we have a stock, guys, that goes on, let's say, a 100% climb, and we can use just, that same, blue color. So right here for number one, and we have a stock right here that goes on a very big climb at the start of the day. And you start saying to yourself, hey, I want to see if this stock is going to be able to have a pullback and I want to be able to get in on this play. Well, what does this tell us right here? You must stay within the top 40% of that play. Because sometimes I see a stock, fall back on down, right? And where do we want to stay up to? We want to be able to get a bounce, most likely like right here, right? This is where we want to be able to get our bounce. This is up near, again, still the top of the play, but we gave it room to be able to fall back on down. If the stock starts going any lower than like 50% of its climb, that usually just means buyers have left the play and sellers are going to take over, right? And this is maybe something that I just have an eye for because I've been in the stock market for a while. But if a stock goes, let's say, from $1 to $3, okay, the stock goes from $1 to $3. This would be at like 250 or let's say 225, right? That would be understandable. 250 to 225. The stock went on a $2 spike. It fell 75 cents. That was a great area for people to get out. And now again, the stock can consolidate and move its way back on up, right? But the stock, again, you don't want to be looking to buy the play at a couple different areas. Number one, where don't you want to be looking to buy the play is all the way like up here. Pullbacks aren't going to just be after a $2 spike, only like 10 to 15 cents. Give it, that 30% drop, that, 25% drop as it comes all the way back down. That's 75 cents from $1 to $3. That's a great smart area. Buyers who just bought this play $2 are going to be able to take their profits. Shorters are going to get a little bit. And since the stock spikes so big already and is on everyone's radar, trust me, people are going to come back in on this play if it can hold the top of this play. If the stock, though, starts falling, don't look to buy an entry like back down here for support, though. And why do we say that? Well, because the stock has already given back so much. If a stock goes from $1 to $3 and falls all the way back down to, let's say, 150, right? What just happened? Well, now technically, if you want to think about it like this, the stock has only moved 50 cents and actually fell $1.50. So, that's not going to be having a lot of buyers, right? What sounds better, when a stock maybe spiked $1.25 and keeps moving, or when the stock only moved 50 cents but fell $1.25? Right? You want to stay on the upper half. And this is kind of the same exact thought process, right? With what? This is the same exact thought process with mid-candle breakout patterns, right? When we look at mid-candle breakout patterns, the stock spiked on up. It doesn't dump all the way back down to where it opened before it spikes. No, if a stock wants to continue to spike, it stays on the upper half of the spike, right? Just like when we look at like OPTT right here, it spikes that up. That is like right at the half, but more of the upper half of that spike. DELT, the stock spiked on up. It doesn't drop all the way back down to, if the stock goes from $1 to all the way up to $3 or close at 250, it's trying to stay up above the half. I would say half would be down like right along this area. It's trying to stay on the upper half before it continues to move on up. BSPM, stock is staying on the upper half of that pullback, of that big time spike before it starts moving back on up. right? Same thought process as if it starts giving back more than 50%, that's usually where the stock is just going to dump off at, right? That's usually where the stock is just going to fall at because it doesn't have, much potential towards that play anymore. So it must stay on that top 50%. Now, what else do we have, right? How high, right? How high as it spiked already? So how high has it spiked already? The higher you go, the more risk there is. And you guys know this, right? If you're saying, when is the stock going to have a reversal? Well, if a stock has moved, let's say 150%, 200%, 300% already, that stock has a great chance of reversing and turning soon. And we see this the most where? In pre-market when the stocks open on up, right? That's where we see that the most. If that is, SAEX, right? The stock has a massive gap up and drops on down. And we see this happen all the time where people are like, oh, I'm just looking for a bounce play. And the stock just keeps on going. Well, the stock gapped up from 150 all the way up towards around that 450 mark, right? If we're having a 200% gap up, don't be surprised if we see some sort of big drop off. PULM, the stock went from 84 cents, opened all the way, or was all the way up towards around 175. The stock was up about 105%, right? And that's where we start seeing these big time pullbacks, right? I always remember like a KBSF. KBSF has gap ups and loves to drop on off all the time, gap up and drop on off. I can scroll back probably about a year. Look at this big time gap up and then drops on off right here because the higher you are, like MCUR, big time gap up, drop on off right here. The higher you go, the better chance you have, not for just a pullback, but for people to say, all right, hey, you know what, this is good. I'm going to take my money. Hey, I'm going to make sure I get out of this play. Everyone does that, and the stock starts falling, right? How else do we know if a stock is going to be able to have a pullback or if the stock is going to be able to hold on up, right? And what we have right here, if no stock has been able to consolidate, don't expect it to now, or excuse me, have continuation. I know I got to fix that right there. So that would be continuation, right? If no stock has had continuation, don't expect it to now. Right? Today's a perfect example of that. What are the market conditions? Well, today's the first day of 2020. And what has some of these market conditions been so far? Not many, opportunities for very great pullbacks, right? We've had SES hit $10 and fall, $10 fall, $10 fall, break out of $10, and then just dump right back on down. We've been seeing so many fake out breakouts. RCON come on up to $3, spike on up, and then dump right back on off, right? So a lot of these plays, PULM, every time it tries to get a breakout, it just dumps on off. What we want to do is understand market conditions, right? The best dip buys, the best time to get in on plays are the most consistent stocks. Can you look for a dip buy, like while looking at this chart? Can you get in on PULM and make money as it bounces back up? Absolutely. But the best dip buys are the ones that are top gaining plays and that everyone's looking at and do have some sort of uptrend, have some sort of big morning spike. The stocks that get people excited are the ones that are going to have the best dip buys that have proven track records, right? And what do I mean by that? Proven track records of moving on up. If let's say a stock closed off previous day, right? That was, let's say, Friday. On Monday, it has news, opens up at a reasonable area, somewhere between 50 to 80%, like right here. Then the stock opens on up, goes on a massive spike right away, right? And maybe we saw, after hours high, right? Maybe in after hours, and we'll just, when the stock, was moving on up, and or in after hours in pre-market, the stock moved on up, maybe got, a nice spike up here and then fell and then opened up right here. Like, where can we expect a dip buy, right? We can expect a dip buy, right across this area right here, as that's old, again, resistance, which would hold up as new support, where the stock could, again, dip buy and start moving its way back on up, right? Now, if it cracks this support line, that's where the stock, gets a lot more ugly. And that would be another reason on what? That would be another reason on if a stock is going to do what? Have a reversal. Find the strongest support line you can, okay, on every single stock, and say to yourself, hey, this stock right here, if it falls beneath the support line, I know most likely it's going to get ugly. For example, SES. SES is a perfect example of this. As I know, SES is a very strong resistance at $10. Once we break $10, I say to myself, hey, this is great. We're looking awesome right here, right? We're looking awesome, staying above this $10 mark. But if it falls beneath this $10 mark, I know things are going to get ugly. What happens? It cracks $10. Things start getting a lot more ugly. That's where the stock starts dropping on off. For example, INPX, right? INPX. If we look at this, where would be our dip buy? Where would be our support line? Well, INPX moving on up, moving on up, moving on up. Stock goes on a massive spike, dumps on off right here. What can we do? Look at our old support line. Old support was right around 20 cents right here, right? Right around 20 cents. We also have our VWAP support. So not only is 20 cents old support, we also have VWAP support. If INPX ever cracks this line, things would get ugly. But I know this could be a possible dip buy where the stock goes from 20 cents to 24 cents. So a huge part of understanding if a stock is going to be able to be a pullback and be able to get a dip buy, or if it's going to reverse, is to try to find that massive support line where you say, if it crosses this line, things can get ugly. Now, the best way to trade these stocks is to go ahead and get in on the play at that support line and put a stop loss maybe a couple cents below this mark. So if it can hold up at this area, perfect. You're in at the absolute bottom. But if it can't, okay, you're getting out with only a few cent loss, right? And that's definitely important to always be looking at while looking into these plays. Understanding if the stock is going to what be able to hold its main support line. So far, ways to tell if a stock's going to pull back or dump. How low it falls from the top. We want to stay with that top 40%. How high it's spiked already, right? What are the stock market conditions over the past week? Also fix that so it's a continuation the right way. All right, so the higher you go, the more risk you have. And if no stock had continuation, don't expect it to now. And something, again, I should probably add, which you just talked about, which would be find that main support. If main support cracks, that's where the stock's going to start falling on off. How else do we know if a stock is going to be able to bounce back on up at a pullback area, or if the stock's going to dump on off? Level 2, right? Watch for large sell-offs, right? We see that happen a lot on the level 2, where we look right here and we could be seeing all of a sudden we come to a support line, and let's say it's SES, at that $10 mark. And instead of seeing a big bid order, let's say of 10,000 shares to keep that stock alive and going, on the ask, we see a lot of selling, right? At the ask, we see big orders, people wanting to get out of this play, and the bids start getting lighter and lighter. The level 2, as we know, guys, is basically, this is how we can see in the stock market. We see all the buyers, we see all the sellers, we see how many shares the buyers are buying, we see how many shares the sellers are selling, right? And this is going to give us a great understanding of which way momentum is currently moving. Like right now, SCS is pretty even. We got one buyer at 940, one at 945. This is a little bit of a seller. So again, the stock may get a little bit of a drop coming on up just because it's a little bit of a bigger seller. We're at about 1,900 shares going against 100 shares. But right now it's pretty even. And that's why the stock has just kind of been moving sideways at this point, because it's not too much. Now, this comes down to level 2 reading and be able to understand the level 2. You definitely have to watch the lessons on that. But you can see we are starting to get a little bit of a drop because there were more sellers than buyers. And again, that makes sense. If 100 people are looking to sell a stock and only 10 people want to buy it, what do you think is going to happen? The stock's going to fall. There's 90 more people willing to sell than buy. So watching the level 2, when we get to that main support line, right, that's going to be extremely important, right? So we want to be able to find that main support line. And then from there, we are going to want to say to ourselves, can we hold that support line? And as long as we can hold that support line, well, then we're good to go, right? Then we're good to go. And that's all it comes down to. So let's go back to this. And we can see I just wanted to add as well, find main support line, right? Because from that main support line, that's where you can really just do everything you want. How low it falls from the top, we find that main support line about 40%. If it bounces off that line, we're good. If it cracks underneath, you're out. How high is it spiked already, right? The stock is up huge. Find that main support line, goes below that line, things are going to get ugly. What are the market conditions over the past week, right? If no stock had continuation, don't expect it now. If every stock is spiking and dumping and reversing, don't expect to be, getting in on pullbacks. If every stock spikes and dumps, don't be like, oh, this is the one that's going to be a pullback. Wait for pullbacks to happen, then do it. Level 2 reading. Watch your large sell orders. If you're saying this is the area that I want to be able to buy in on a dip buy, and you look at the level 2 and everyone is selling, don't be the person that gets in on that. And last but not least, and one of the best ways, right? One of the best ways to be able to say to yourself, is the stock reversing? Is did we hit a main target? I will probably say this one right here, guys, this one right here will be one of the easiest ways to know if a stock is going to be reversing. Okay? So this right here is going to be one of the best ways to know if a stock is going to be reversing or not. And it's when it hits a main target. What's a main target usually? $10, $1, $5, or an indicator, such as 200-day moving average, 50-day moving average, 13 EMA. And this is what you're going to see a lot as well. For instance, right? For instance, let's say this is the 200-day moving average. Okay, this is the 200-day moving average. And let's say we have our 13 EMA, right? We have our 13 EMA swooping across the bottom, right? We have the 50-day moving average at the top, right here, and we start having a little bit of a squeeze. And where's the stock? This is the stock right here. Okay? This is the stock right here. Okay, and what usually happens? Well, a stock will all of a sudden start breaking out. It starts breaking out, it starts running, starts ripping, starts moving up. Now, how high are traders trying to push it? We saw this happen all last week. We saw this happen all, even today sometimes, where we see these plays keep going, 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 and we know momentum is trying to get to one part. And what's that part? Right here, the 200-day moving average, right? They try to get to some sort of a resistance line, because this right here is the clear-cut area that everyone would say to themselves, hey, once we hit this line, we can start selling, because that's the area that we want to get to. So if you have a big breakout and you hit a strong resistance line, that's one of the best ways to know, right, that this stock is going to start falling on down. And this is a pattern that you're going to see a ton in the stock market. All right. So, for instance, last week, XRF was one of those plays where the stock, spiked on up, ran right above its 200-day moving average, and then cracked back on down, right? And you're going to see a ton of plays like this where you're going to see a run, hits the 200-day moving average, and you see a very strong pullback. You see a very strong reversal behind these plays. Like INMB, if you're in long on this play, where would be your sell target? The 200-day moving average, right? That's, what you would want to be looking for. BIOC, what's your target? 52 cents, the 50-day moving average. That's where traders are always trying to get these plays up to. Same exact thing we want to look, over on OTLK right here, right? OTLK, what did we hit? We hit its 13 EMA. Why do you think the stock's falling right now? Because we just hit our indicator, right? I'm just going through the top gainers right here. AMBO trying to get up to that 200-day moving average. SAVA's above its indicators right here. Look at this. RCON. This stock did what? Spiked up to where? The 50-day moving average. Spiked up to where? The 50-day moving average. And that's where the stock started reversing and start coming back on down. So I want you guys to see this and understand now, okay, where do I get in on plays, and where can I get in on stocks on pullbacks that are actually going to hold and not just dump on me, right? And these are, some very important things, right? And we're just going to review it one last final time. So number one, ways to tell the difference if a stock's in a dump or reverse: how low it falls from the top. If a stock is spiking, if it starts consolidating around here, that's great. It can move on up. If the stock starts dumping, we're not looking for a dip buy down here. That makes no sense. The stock has a lot more sellers than it does buyer, right? We also want to see how high has the stock spiked already. This is definitely focused a little bit more towards pre-market. If the stock opened up or closed at this mark and we open up the next day all the way up here, we have a great chance of doing what? A little pop and falling all the way back on down. Just like SAEX, right, where that has that huge red candle, just like MCUR right here where we have this huge red candle, it definitely gets a little bit ugly. What are the market conditions over the past week, right? What have we seen today, right? What have you seen yesterday? If a stock, every single stock spikes on up, comes back on down, looks like it's about to dip, but then dumps. And then this one spikes on up, looks like it's about, and then dumps. and then spikes on up, and we see every single day or every single play looks like this, don't look for a dip buy. It's most likely turning. We also have our level 2 reading. Look for large sell orders. Find your main support line, and if the stock can hold that main support line, go ahead and buy in. You'll also see other people looking to buy in as well. But if you see large sell-off orders, don't get in on that play. Stay away from it, right? So again, find that main support line. And last but not least, if the stock hits that 200-day moving average, it's most likely what? It's most likely done with our 13 EMA or 50-day moving average. All I'm saying is we have some sort of moving average right here, if that's the 200-day, the 50-day, or last but not least, that 13 EMA. When a stock usually runs up to it, this is usually the sell target that traders all agree on of, hey, I'm probably going to get out of that stock right now. All right? All areas, all different ways to tell yourself if a stock is worth getting in or if a stock is not worth getting in for that possible dip buy. And these are all the different techniques I use to help myself stay profitable in a market, stay away from a stock that's just dumping on off, and looking for more of consistent, more credible, and more reliable trades for you to be able to make money in this market. So again, I hope you guys enjoyed this lesson. If you have any questions, please let me know. But other than that, again, that's going to be wrapping up this lesson right now.